So in this video, I'm going to be talking about specifically the US stock market. Now, I want you to understand that the United States of America remains the most powerful economy in the world, and the stock market of America remains the most profitable in the world, with a lot of money coming in and a lot of volatility for investors to profit off of. So I want you to understand something. I do not think that this is the best time to actually be a buyer within the US stock market or for you to jump in and buy any shares. Primarily because I do believe that a lot of the shares within the stock market or a lot of the companies are simply, it's all a hype right now. It's all a hype. It's all based on exuberance. Yes, of course, these companies, some of them are profitable, some of them are not. But you have to understand that it is mostly based on hype right now. And one thing I want you to understand is that the stock market has had a 60% rally. It's had a massive rally in recent years. And what we can equally see is that in technical analysis, there's what we call AB equals to CD, pattern completion, where you have one leg of price action being equal to the other leg of price action after a pullback. But that's a technical term. But one thing I want you to understand is that the US stock market and the markets that we are looking at right now, if you're someone that wants to buy shares in Apple, you want to buy shares in any company, you want to buy shares anywhere, or you want to invest in the stock market, you want to buy the indices, you want to buy the entire market as a whole and have that rally, I want you to understand that this particular market is overextended. And if you get into the market right now and you buy right now, you would most likely be providing the liquidity that the big institutions need to get out of their trades. And the moment you do that, you see the market begins to take a turnaround. So it is important for you to not fall victim and for you to not get into this market and be a buyer. Now, on the side that concerns every single human being on earth, the side that concerns you is that in 2020, most of the money you have in circulation right now, these funds were printed in 2020. And they were sent into the market in 2020. And when you have such huge volume of money, trillions of dollars coming into the market, you're basically diluting the value of the current money in circulation. And what that simply does is that the prices of goods and services will ultimately go up because you have just too much money in circulation. And when you have too much money in circulation, the price of goods and services will go up. But I want you to understand that since that happened, we had, this was COVID era, and then the market rallied and made a recovery. But since 2022, that is right after all those money came into the market. Since 2022, the market has taken off and has gone to astronomical heights. We have the S&P 500 trading at $6,000 per handle right now. That's what we have. That's the exact thing that I'm looking at right now. So if you have that type of situation, if you have that type of environment where you see a lot of money coming into the market, coming into the economy, and then you are seeing the stock market rally, it tells you that the elite, the guys who have access to credit, they have taken all that money and they have used it to invest, they've used it to expand their empires, they have used it to expand their businesses, and they have, of course, used it to invest in the stock market. But then, where you now look at the entire thing is that now up to 30% of Americans are living from paycheck to paycheck. You are seeing more inflation in America, you are seeing more Americans struggle to meet their daily needs. It tells you that all that money being pumped in is actually being utilized by the elite. But now I want you to understand something. If you are someone who is probably a low-income earner, a middle-income earner, whatever type of income earner you are, it is very, very important for you right now to be extremely tight with whatever money you have. You have to be really, really tight with your money. You have to be very tight with your money, and you have to cut down on several expenses. The reason you need to cut down on several expenses is so that it can afford you the opportunity and you have some spare cash to be able to invest and to also have some spare cash to be able to maybe start a business. Because at the end of the day, one thing you must understand is that your salary is not recession proof. Your income is not recession proof if it is not based on investing and if it is not based on a business. So you need to find a way to start a business, own a business, or you're actually taking all that money, the spare cash that you have, and you are investing, at least in the stock market, or you're investing in, treasury bills, whatever it is you have to invest that money in. Just take some money and invest in something. Set some money aside for investment, because ultimately there's going to be more inflation. More inflation is going to come. When this stock market comes crashing down, of course, they're going to try to save the situation. The government is always going to try to intervene. And when they intervene, it always requires printing more money, it always requires pumping more money, and of course, that ultimately leads us to an inflationary environment. So I don't know if that makes sense to you, but wherever you're watching from, I sincerely hope it makes sense to you. Of course, I encourage you to like, share, leave a comment, whatever your thoughts and suggestions are, please leave them in the comments, and I'll be more than happy to engage with you. Cheers.